Good morning, everybody. Hope everyone's doing wonderfully well. Welcome to the game plan. I am back from vacation and I am ready to crush it with you guys. It was a good time away, but honestly, I couldn't wait to get back to the markets, to continue to analyze the charts, to see what's going on. Again, this is the game plan every Monday through Friday, basically 9 a.m. on the button or as close as we can get, and that's the key. I'm going to deliver the alpha to you guys, as you know, since you've been watching this for months now. All right, so let's get into it. First things first, we're going to jump over here. Look at the S&P 500 here. So we have a couple trend lines that we're going to follow. Number one, we have this pivot point up here. This is your double top all-time high. We are very close to hitting it. We also have this longer term trend line. Check this out, guys. Look at all these pivot points along the way that this one has hit. And look at what we already hit. So we've already hit this one, which tells us we're into resistance. And then we also have this double top right up here, which would just be a little bit higher, basically about 1 to 1.5% higher on the S&P 500. So let's talk about this. I said I would give forecasts. All right, so forecast for the S&P 500 as well as the NASDAQ, which we're going to look at here. Next year is going to be a tough year. You had a bad year in 2022 for the stock market, a great year in 2023. 2024 is going to be tough, guys. You're going to see the repercussions of the Fed rate hikes ultimately coming up and hitting the market and the economy. Now, just to showcase what I'm talking about here, let's flip over to this real quick, right? And basically, if we go to this, what we have right here on the charts is the bankruptcy filings. And this is just the beginning, guys. And again, look at what happened. When the Fed started raising rates, bankruptcy filings are starting to pop. They're up significantly. Basically, what we're looking at here is we can go back on these charts and we can see that right now, if we draw this line across, you're basically at the highs of 2018. And the last time we were at this level, you'd then have to go back into 2011. We're not nearly back to the 08, 09 level, but that makes sense, right? Because you haven't seen the economy collapse yet. All right, right now the tightening cycle is here. Now, yes, is the Fed generally thought to be done raising rates? The answer is absolutely 100% yes. But the market has priced in now 175 basis points of cuts in 2024, and honestly, that's not going to happen. And I'm going to tell you dead on, it is not going to happen. Another forecast for 2024, I think you'll get about 100 basis points cut, but the 10-year yield has already overpriced that in. So if we go back to the charts, and I want to show you guys this here, if we go back to the charts, right, and we go over to the 10-year yield, what do we see? We see the 10-year yield having already collapsed off of these highs up here, right? So again, we're looking at these levels up here, and again, all the way up in this range. And again, if we look at that from 5%, we're trading now at 3.9%. So again, right now the Fed funds rate is at trading right around the 5.5% level, right? That's the Fed funds rate. The Fed funds, again, pricing at 175 basis point cuts next year. There's no way that's going to happen, which tells us that at least at some point you're going to see a reversion to the mean in the 10-year, right? So what we're going to end up seeing is a move back up like this. Okay, and again, we're going to see that kind of push back up in this range. My guess is we're headed back to about 4.5% on the 10-year. Now, again, if you think about it, what's a 100 basis point cut from 5.5%? 4.5%. That gives us a general target right in this vicinity on the 10-year. And again, guys, this is the way markets work. Markets swing like a pendulum, right? They get euphoric and then they panic and they go this way and they go back and forth. And the answer of where the market should be, there's an equilibrium in the middle, somewhere in the middle. So that pendulum swings and it swings less and less and less and less until it finds that equilibrium based on the current information in the markets. Now, the key is this: information's always changing. So that's why you get these continual pendulum kind of reaccelerations over time. But based on what I'm seeing in the market, in the economy, remember, guys, people were out spending this holiday season, but you're going to see more buy now, pay later, even into Christmas. We saw this at Black Friday. People were like, oh, listen, I can't afford to buy all this crap, so instead I'm going to put it on this buy now, pay later. We've seen a firm stock go nuts. That's going to come crashing down in 2024. All of these type of things will come to fruition. You can't again sustain the drug-induced debt kind of fiasco that this market, that this economy, that this world is seeing at this point. It is unsustainable. It's just a matter of when it comes crashing down. Now listen, I'm going to be the first to tell you, you're not going to see a big time market decline crash in 2024 because the market still believes, at least in the first half of the year, that the Fed will bail us out with rate cuts. It's going to put a bottom in the market. Yes, we can drop 10, maybe 20%. Unlikely, at least in the first half, we're going to see more than a 20% decline in the stock market. And again, that's because the Fed is going to be looked at as the saviors. They can come to the rescue. It's only, and I repeat, it's only when we see that the Fed ultimately loses their power, when the U.S. tries to sell debt, and they can't sell it even after the Fed drops rates for, let's say, less than 5%. Let's say the Fed drops rates to 4% or 4.5%, and the auctions at the Treasury, people are still demanding 5, 6, 7% on our debt. That's when everything implodes and it blows up and the cataclysmic effect ultimately takes place. Now, that's not going to happen, honestly, probably in 2024, but ultimately you're going to start this process. This process has already been started. It's basically a snowball rolling down the mountain, and it's not going to stop anytime soon. It's only getting bigger. And you're going to see this year, guys, 2024, in my opinion, we probably get close to 40 trillion in national debt. Think about the amount of interest we're paying alone. That's literally trillions of dollars a year. And remember, there's a massive amount of debt that's rolling over. I think it's something like $7 or $8 trillion in 2024 that's going to have to be recycled, essentially redone at higher levels. Now, yeah, interest rates have come down, but they're not back to where they were a year ago, 2 years ago, 5 years ago. We know that type of stuff. Okay. All right, so what we have here, we have the 10-year yield. Expect in the first half of the year a move back up to 4.5%. Let's take a look at this. Another chart to look at. Let's look at the U.S. dollar chart. So the U.S. dollar chart, if we look at this, guys, is basically into a major technical support level. So if we look at the chart, right, what do we have? We have this level here, we have this pivot, and look at where we currently are sitting. Now, in my opinion, 2024, early in, probably first 3 months to 6 months, this is going to break to the downside. All right, again, this is going to come on the back of a weaker economy, which ultimately people speculate means more printing of money, which means more debt, which means all of these negatives and negatives and negatives left and right, as you guys know. And again, I know I'm preaching to the choir. I know you guys get this, but ultimately I want to just give you that insight so you can kind of understand it and hear it from me. All right, so where's the dollar going? My guess is you're going back probably in the range of this area down here. So you'll see a dollar that moves into the low to mid 90s on the Dixie. Now, again, usually the stock market loves that. Oh, a cheap dollar, this is wonderful, cheap money, all this kind of stuff. But a cheap dollar can fuel inflation. Right? We know that, which is also going to be problematic. Notice that oil has already hit my target that I gave you guys literally like 2 months ago in this game plan. It was a measured move based on a head and shoulders. We're now starting to move back up, and you're going to see a lot of this stuff. Inflation is going to start upticking again in 2024. So this is going to put a big roadblock in the Fed and their ability to just cut rates and say, oh, who cares, just print money, because once rates start going up and the Fed loses that control. Remember, the Fed right now, everyone perceives the Fed as having control. There will be a point, mark my words, there will be a point where the Fed loses that damn control and it all comes tumbling down. And that's where all of us have to be really careful. All right, that's where you have to be positioned. Lots of gold, lots of silver, even Bitcoin once it corrects back down after the ETF, the spot ETF gets going. And we'll talk about Bitcoin in just a little bit, along with gold and silver. Okay. Let's go on to the next chart here, guys. Let's see what we have here. So the QQQ chart real quick. If we look at the Qs are into short-term resistance. This is a double top all-time high on the Qs. I do think there's a chance, considering it's year-end, that we could float up a little bit more, right? We already see the futures up a little bit today. That's just the nature of dead volume. Literally, the volume is non-existent. Light volume is always a benefit to the upside. That's just the nature of the beast until the algos start kicking in and causing a crash. But that's not going going to happen in the short term, in my opinion. Where's your upside target into year end? You're probably looking at just a little bit higher or early in 2024, right up to about 415 to 420 on the QQQ. But once you get there, now you've pierced the all-time high, and now you've also come into this upsloping trend line. Now you'll hear a lot of people talking about a breakout on the NASDAQ. I caution you on that. The reason I caution you is remember what Bitcoin did. Bitcoin had this amazing rally, early bull market in 2021, came down, went up, made a higher high, and then it had its bigger collapse, right? So you have to know that markets do that. They like to throw people off. If you look at how many people are bullish, if you look at the commitment of traders reports, you're starting to see more regular folks diving into the market, going long, while the smart money, what we consider the commercial money, is slowly starting to heavily start to pull out of the market and even go on the short side. So they're seeing this ultimately as well. They know that the markets are now slowly moving off sides. As bearish as the market was when we were over here, remember in early 2023 when we were down in this range? This is when I was going long the market and we were covering all our shorts at that point and verified, well, in themoneystocks.com's the stock service. But ultimately what you saw here is people being way too bearish. You're now seeing the inverse of that. Everyone's thinking the markets can't be stopped because the Fed is this savior. And again, we know that ultimately that's not the case. And by the way, just look at recent history. Remember transitory? Oops. Remember, I mean, you can go back literally a decade and you'll find countless times where the Federal Reserve was wrong, and that's just, again, what we've seen. Okay, so again, we just really want to go over that chart. I wanted to show you that real quick. I do want to just show you a couple quick charts here. Take a look at the Tesla chart. Tesla, again, is up against resistance. Notice the down-sloping trend line. All right, so again, pivot, 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 pivot all the way down here, right into that level. If it breaks through that, you have upside to about 280. That, again, would be a short-term breakout, but it would be a short-term breakout and what I would call a minor breakout because you'd come right into this upsloping trend line right there. Then you'd have to reevaluate after you see how the price action is. Couple other charts to go over here, guys, on my feed here. I wanted to look at the SMH. SMH, guys, SMH has hit a long-term trend line. Take a look at this one, guys. On the SMH, you have this low pivot from the COVID low right through this area, and look at what we tagged, and we did pull back off of that. My guess is the semis, which are the most loved sector right now, they will be one of the underperformers in 2024. The concept here, number one, why aren't we seeing more of a pullback in the markets into year end? Because no one wants to sell for tax purposes, right? Why would you sell into the end of the year any of these stocks or the semis that have run when you have to pay taxes on those gains? Semis are up huge for the year. I mean, absolutely humongous. So again, you have to look at it like, okay, once we get to January, you will see some profit taking come in. At least that's what probabilities suggest and history suggests. Will it be the first week? Who knows? But ultimately, you'll see that coming into play here. Another chart I wanted to just show you real quick. JP Morgan Chase, JPM, incredible run, 25% run from peak low to high here. That is almost unparalleled in the history of JPM, at least in recent history. You also just filled a gap right here. So again, my guess is you start to see this coming in as rates are going to start to bounce in this general vicinity. So again, think about the confluence of things. When rates go down, banks love it, right? We've seen the KRE do well, KBH, all these things. Then ultimately, when we see rates go back up, the banks will start to pull back just a little bit. All right, I want to step into the center here real quick, guys. We're going to take literally 30 seconds to just thank iTrust Capital for being an amazing sponsor. You guys rock. Take a look.
Do you have an existing IRA or retirement account? iTrust allows you to buy and sell crypto, gold, and silver all right within your IRA. And the best part is, they make it simple. All you have to do is transfer your preferable amount of USD through iTrust and then invest that into crypto or precious metals on the platform. To get access, use the link below to find out more about investing through iTrust Capital.
We have to look at Bitcoin real quick. Bitcoin is pulling back here. Now, one of the keys on Bitcoin, number one, you likely will see a move back to the upside on that spot ETF, but it's going to be real quick. So be ready. Now, I wanted to show you guys this amazing little indicator right here. Take a look at this measured move. If we take this low here on Bitcoin and go to this highest point right here where it had so much trouble, again, look at this. Take that low and we stretch it up right in here. It's about 15 to 16,000, right? Now, if we take that high on the breakout and we stretch it up to 15 to 16, basically 16,000, look at what you get. You get essentially, and I apologize, weren't able to see that on the chart, but right here, here's your low pivot on Bitcoin to the highs here. Then here was your breakout. Literally, we're looking at 16,000 move up, and then from this breakout, 16,000 gets you right to this 47 to 48 to 49,000 level. So again, that's still my target. I do think it could be a very quick move up, and we'll see. The only thing that bothers me about this, guys, is that everyone's calling for this. That makes me a little nervous. Sometimes it tends to make it invalid, so just keep that in the back of your mind. Another prediction for Bitcoin. Bitcoin will have a tumble back into the 20,000 range. I don't know if it's 29, 28, we'll have to see, but ultimately it will pierce 30,000 in 2024, most likely in the first half. If the economy, and this has been my thesis all along, if we see a collapse in the economy, then it is possible to even go back and retest 15,000. Unlikely that would be in the first half of the year, though. It would most likely be in the second half. Now, my last thing I want to say to you guys, you've seen altcoins make some of the most incredible moves. The first 6 months, this is a prediction from me, forecast for 2024 based on charting, based on human psychology, you will see at least a 50% correction in altcoins in the first 6 months of 2024. We're talking about moves in Solana that are unsustainable. I've been seeing pumping like crazy. Scams are galore out there. I want to be clear on this too, guys, and this is an important factor. When you go on Crypto X or whatever you want to call it, or any of these social media platforms, I hope you guys realize that most of these influencers that are pumping these crap coins, they're getting paid by these coins, literally 6 to 7 digits to pump them. And again, yeah, if you get in and it's hot potato, you get out, sure, as long as you're taking a gain, but you don't want to be holding the bag on some of these guys because, again, it's all hot air based on basically what I saw in the 80s and 90s in small cap stocks. That's what altcoin markets are now, which is part of the process. It's part of the maturity process of any asset class. But just be warned that there's a lot of people being paid in the industry to pump these things to uncrazy levels. Remember, you create this meme coin or whatever, and you say, okay, let me pay you $1 million to pump it. All right, and then they make a $500 million. Sure, what is $1 million over here? And they're just unloading it into people as this craziness goes on. This is going on, folks. And again, part of the reason why I'm in favor of regulation in the crypto markets. You got to know that. All right, gold real quick, guys. I just want to cover this. So if we look at gold on the charts, gold continues to hammer right on this all-time kind of closing high basis of around 2080. Look for a breakout in 2024. Again, I've already given you guys my target in previous game plans. We're looking at just above 2,500 would be the inverse head and shoulder move here of gold in 2024. Silver, take a look at silver real quick here. Let me just zoom out on this. Silver, we have this down-sloping trend line. We need a breakout above this. If you break out above this, first half, you should see a test of $30. I continue to be very big fans of gold and silver. One little tidbit. I just read it this morning. Missouri and Louisiana, I hope I'm not incorrect on those two states, they are looking to make gold and silver legal tender, which means no capital gains tax on gold and silver. If that ends up happening, huge, huge news. Now, again, it's only two states. I want to see if it starts to spread, but I could see it spreading to a lot of states and making it so that, again, legal tender means no capital gains on gold and silver investments. Incredible thought process there, or again, especially on holding the physical metal. Lastly, I just want to cover oil real quick, guys. So again, we have oil real here. There's your target. There's your head and shoulders. That was your target. We hit it. Look at the bounce coming in. I think oil actually is going to chop in this range for the first half, maybe even move back up towards that $80, $85 a barrel level. By the end of the second half, I think it's close to $50 on oil. Natural gas real quick. We came down to that trend line. Remember, I was kind of like, oh my goodness, is this going to break my long-term trend line here? It actually has held so far. It is down today. But again, I would expect this to trade higher, back above $3 in the first half of 2023. All right, guys, quickly going into it here. Listen, back with the game plan. I know I have a lot to say and I got to get stuff out here. So you guys have a great rest of your day. Thank you as always for your kind words. It means the world to me. I'm going to be here each and every day to guide you guys. You guys take care.